Hello and welcome to Pro Trader Strategies Market Commentary for Friday, February the 10th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data again today. We did get here in the United States, preliminary University of Michigan consumer sentiment came in slightly below the expected and came in at 95.7, was expected 97.9. So that is a gauge of how the consumer is feeling about the overall economy. It's just a regular survey, and it is, as some people may look at it as a strong indicator of economic outlook, it's really not, in my eyes, one of the ones to really look at. Anyway, on to the overall markets. We've got crude oil cruising higher again today, up another $1 off of this massive build in oil that we've seen, but it's all due to speculation that OPEC is probably going to crimp spending a little bit more, or crimp production a little bit more, and that's what's causing this market to cruise a little bit higher, but above the first value area high for the time and approaching the value area high for the volume. So the overall market pushing higher as with the rest of the equity markets. Gold futures, though, back above that 200-day moving average and pushing higher after yesterday's massive sell-off. Then on to the bonds. Bonds were giving up a lot of downside earlier today, was well below the 9-day moving average, and of course the 50-day moving average, where it settled below yesterday, but we're just slightly below that today. And surprisingly enough, the bonds are virtually unchanged, especially with the overall equities moving higher today. We've got the Dow Jones Industrial Average up over 80 points right now, and again, we're talking about new historical highs for the overall equities across the board. We've got NASDAQ up about 13 points, and again, very near the highs of the day, and another historical intraday high. Yesterday we had the high settlement. It looks like, again, today we are going to have another historical high. E-mini S&Ps, NASDAQ charts, very difficult to discern which is which at this point, other than the pricing. We got the E-mini S&Ps on the highs of the day, up almost 7 points as we speak. Yesterday was just a big, huge rally and had their historical high settlement as well. But now, again, today, looking like another historical high settlement as we move higher. This is the breakdown of the E-mini S&P chart in 15-minute increments. And as you can see, this is a quadruple top in a sense on a 15-minute chart. On a 30-minute chart, it probably looks like more of a double top, but that is showing a lot of resistance right here at 23.11. So we're going to have to keep that line in the sand on the notebooks, just because it's having a tendency to peter out at that level there. Then on to what I've done. This actually was a trade that I did yesterday. Remember, I talked about this. I was trying to get in a poor man's covered call in Kellogg, ticker symbol K. I ended up getting this late in the day as the market pulled back just a little bit. You can get this filled for a little bit better even today yet. As you can see, the market is slightly down on the day. But I ended up going in and buying the Jan 60 calls and then selling the near-term March 80 calls to collect a little bit of credit for that. I ended up paying $16.10 for that. Last I checked, you could get that trade off for about $15.75. So a little bit better than where I got it. Still think Kellogg could push higher, especially if the market ever pulls back. I think some of these staples are going to do quite well. That's all I've done. I haven't really done anything today. Looking at a couple of things, it's very difficult for me to go out and buy stocks when it's get long deltas on historical highs before we see any kind of pullback. So kind of waiting with bated breath, if you will. Today we're going to be doing a webinar on the broken wing butterfly or wounded wing butterfly, and it's a way to eliminate risk to one side of the market, in this case being the calls. We're going to eliminate all risk to the downside. I'm going to show you how to build that out properly. This is just building upon the overall butterflies. There's a lot that can go into these butterflies, and this is one way that we can kind of play around with this strategy in order to eliminate risk to one side or the other. So next week we'll be doing the broken wing put butterfly, which would eliminate all the risk to the upside. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.